You know what? Let's bring in Stephanie Link because we got to talk. How can we not talk China? It's kind of the story of the week. Chinese stocks surging this week. The FXI, it's one of the biggest ETFs for Chinese stocks, having its best week ever. And one halftime committee members adding names of China exposure. That is, of course, the aforementioned and now on your screen, Stephanie Link joining us by phone. Stephanie, what a week. Although you do wonder, with this kind of a week, are we selling into strength?
Hi, Ryan. It's great to be here. No, I think we're in the first inning of this whole thing. This is the most stimulus in China since COVID. Between the RRR cut, lower interest rates, cutting the down payment investment for investment properties, and they're committed for more. It sounds to me like this is whatever it takes moment in China, and they're focused on consumption stimulus. So I think it's time to buy and have more exposure. I think that portfolio managers are not exposed to China because it's been a terrible place to invest. So they've been right, but I think the tide is turning.
Yeah. Listen, we've seen China throw wads of money at everything in the past. They've got to do it. They've got a real estate-based economy, an interest rate-based economy. Beautiful pop. David Tepper, he was on Squawk this week. I'm sure you saw it, made a ton of money. But is this a long-term play, Stephanie? I mean, is this really like I feel like we've seen this picture before.
Right. Well, I don't know, but in terms of the time frame, it could be a trade. But I think for the time being, it is a trade for like the next 6 months or so. I mean, the RRR cut alone of 50 basis points with a promise of maybe doing another 25, that's going to be $140 billion in new lending. Lowering the interest rates on $5 trillion of mortgages is $25 billion. And again, as I mentioned, they're cutting the down payment on investment properties by 10% to 15%. It's got to lead to better growth. If nothing else, it's stabilization, but I think it's going to lead to better growth. And that's why I want to have U.S.-based company exposure to China.
U.S.-based company. That leaves us with about 3,800 stocks to choose from, Stephanie. We don't have time for that. Can you be a little more specific?
Yes, I can. So Freeport-McMoRan is the poster child for China. The copper market is tight. For every 10-cent change per pound in copper, it's $200 million to cash flow to them. At $4 copper, they'll have profits of $11 billion. At $5 copper, $15 billion in profits. And this also ties right into what you guys were talking about in terms of Eaton and industrials and power and grid, because all that needs copper. Their net cash costs are coming down. They have a $5 billion buyback, and the stock trades at 6.9 times EBITDA versus 9.2 times for the 5-year average.
I just looked before we went down to the show, and I was on my fact set doing like a search for this week, see what was hot. I was shocked, and I look forward to getting the committee here on set into this as well, Stephanie. Las Vegas Sands, which you just bought, and Wynn are up 20% since Monday. Jim just he's doing fist bumps next to me off camera.
It's long overdue. Stephanie knows it.
But 20% gain, Stephanie. You bought Vegas Sands, but come on. What justifies a 20% gain in a week?
Because it's still down 2% year to date, and it has done nothing in the past year. And the reason it's done nothing in the past year is because the earnings have been disappointing. 63% of Las Vegas Sands revenue is in Macau. And I love Macau, but they're spending a ton of money on their properties renovating. That's going to come to a halt in the first quarter of next year. So I think they're going to continue. They will regain the market share that they have been losing. And in the meantime, their Singapore assets, which is 37% of total revenue, it's a gem. They're running at about 18 to 20% adjusted property EBITDA. The stock trades at 9.7 times EBITDA versus 28 times 3-year average. It's cheap, and I think you're going to see a recovery in the name.
Stephanie, it's Jimmy. You know I agree with you on this. We talk about this from time to time. I think what the viewers also need to know is that prior to this week's China news, Macau gross gaming revenue was actually shooting through the roof. I forget if it was August or July, but one of those months was the best month in Macau since COVID hit, and it's clearly going past the pre-COVID record. So you add on top of this the China stimulus. I think both Wynn and Las Vegas Sands are winners here. You know I like Wynn, though, just because I do like that Las Vegas exposure. I was out there last month in August, and I can tell you it continues to go gangbusters in Las Vegas, as it has for, frankly, several years now. So good call. I'm with you.
It's amazing. The
Thank you.
$62 spaghetti pomodoro at the Sinatra restaurant on the way is packed.
You want to have a beer poolside? Fork out $18.
Yeah.
Like
And
literally.
That's the 9-ounce cup.
It's a Corona.
Anybody here got a view on the casino stocks? Anybody? Bueller, something OO economics? No? All right, so let's move on. Going into this market, I'm looking at these top performers, Jason, this week. It's not just, okay, Estee Lauder up 18%. United Airlines, thank you, Brenda, up 13%. Tapestry, which is the former Coach, up 12%. We keep talking about this consumer. I can't figure out the consumer, Jason. You're in Philly. There's certain things that are probably busy, certain things that are not. But it does feel like the higher end is still just dominating the consumer and the stock market.
There's no doubt that the consumer is hanging in. And I think, obviously, from a policy perspective and in an easing cycle, they'll be further stimulated. So I think, and you could pay attention to, obviously, some of the other discretionary names that I know we'll talk about, and we've been talking about, the Walmarts of the world, the Targets of the world. There's been a lot of retailers that have done relatively well. Costco, obviously, is another one. So for me, I think it's still somewhat, there's obviously some divergence between the type of consumer, but I think all in, they're hanging in.
Yeah, I think on the consumer topic, I think we've seen a lot of retailers like Costco, TJX, those that appeal to a large variety of people and types of consumers, where you see the high-end consumer maybe kind of trading down or looking for a bargain, not necessarily because they have to, but because they're tired of paying so much for things. Yeah. So I think we've seen this ongoing consumption with the low end, struggling a little bit, but overall, still
I know
very
Stephanie's got a view on the gap, but just, I mean, the market divergence has been striking. I'm looking, Dollar General and Dollar Tree are down 33% and 31% this quarter. Walmart's up 18% this quarter. You think maybe they're the same consumer in some respects? Maybe they are, but when you have a 50% divergence in the equity this quarter, it's really striking. Stephanie, saw a big interview with Jim Mad Money, the new-ish CEO of the Gap, very bullish. I'm told denim is hot. I don't know. Maybe you do. What do you like about the Gap? You added to that.
Yeah, this is all about the management change. We're starting to see results. Richard Dixon went to the company as CEO in late 2022, and it sometimes just takes time for new management teams to make an impact, and I think he is. In addition to Richard Dixon, he hired a creative director for Old Navy and the Gap. He hired a new CEO for Athleta. He hired a new CEO for Old Navy, who, by the way, was at Walmart for 26 years. So this is all about new management, better execution, better product, inventory controls, and higher margins. Their inventories are down 7 consecutive quarters, which means fewer promotions, and gross margins last quarter alone were up 500 basis points, and they're expected to be up 200 basis points in 2024. I think they're lowballing. So they've been gaining market share for 6 consecutive quarters, and back to school I'm hearing was very good for them, and also free cash flow is growing about 7%. So 11 times earnings, 2.9% yield, and a management change I think is really exciting.
Yeah, I mean, I saw the interview with Jim. Great interview by Jim as always. The CEO, Richard Dixon, very bullish. The stock has done great. Stephanie Link, some good calls there. Appreciate your views. Thanks for phoning in on a Friday, Stephanie. We'll see you soon.